What's up, traders? Welcome to this video with Zoheb, who you might recognize from the channel. He was on here a long time ago talking about Forex. One Glance Trader is what he goes by on YouTube. Welcome to the show, Zoheb.
Thank you, Cam. How are you? You good?
Yeah, I'm good, mate. Well, look, guys, we've got something very different for you today. So Zoheb sort of veered away in the past year from Forex, and he now trades options, and he wants to show you what he's been doing to, I think it was make over 50 grand, about 50 grand. We're going to see proof of that in a second in the past year, just trading an option strategy that you're going to learn today in the video. So Zoheb, I'm going to hand everything over to you. Share your screen. Let's get on with it. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
Brilliant. No, appreciate it. And so I just wanted to just give you guys a quick snapshot of my interactive brokers account. And like Cam mentioned inside the intro, you know, I came across options trading. I dabbled in it last year, but in January 2021, I started to become serious, and I invested, you know, just over 15K into the account, and I sold my first Apple put option where I received a options premium credit, which we'll go into, of like $46, and after that, I've been hooked. And I've been trading a strategy called the wheel option strategy, which we'll talk about today. But effectively, you know, as you can see here, that, you know, started back in January, and, you know, since, you know, September the 6th, 7th, you know, I'm around 66, 67K US dollars. And there has been a couple of deposits along the way, like this big spike here is like a 5-10K deposit. But like I said, 99% of this is all collected through either options premium, doing the wheel strategy, or capital appreciation in stocks. And what I wanted to do is walk you guys through the wheels options strategy. So what I've done is I've kind of put together a little guide, and, you know, we can link to this, Cam, if anyone wants to go kind of pick this up, and there'll be a lot more videos on my channel if you guys are interested. But effectively, what we're doing here is you can either, well, firstly, options are, you know, a leverage product for stocks, and you can either buy options or you can sell options. And what the strategy I'm teaching you now is where you sell options. And when you sell options, you receive what's called premium or a credit that the buyer pays. And what I've been doing is I've been selling options on stocks that I've been bullish on, and we'll go through an example in a second, to generate monthly income through collecting those option premiums. And there's kind of 3 steps to this strategy, and I like to start with step 0, because a lot of people, when they look at the wheel strategy and selling options, what they do is that they pick stocks that have very high premiums, so therefore they collect a lot of credit. You can get burnt by that, because if you are assigned the shares, you have to hold the shares. So my number 1 tip is, if you're looking to sell options or trade the wheel strategy, is to pick a stock you don't mind owning. So this is a bullish strategy where you expect the stock to go up. And one of the best stocks throughout 2021 that I've made a lot of money on is Riot Blockchain. Now, Riot Blockchain is a US Bitcoin mining company, and if you overlay BTC chart against Riot, you will see that it moves very similar to Bitcoin, because as Riot, as the name suggests, they mine Bitcoin. So as they mine more Bitcoin, and Bitcoin rises, Riot stock rises. As Bitcoin falls, Riot also falls as well. But I'm very long-term bullish Bitcoin, so therefore I'm long-term bullish Riot, and therefore Riot is the stock of choice of why I sell options. And as I mentioned before, it is a very volatile stock, and the more volatile a stock is, the more premiums or more expensive options premiums are, so you can make a better return on the collateral that you're putting down. So once you pick a stock, and again, like I said, most stocks have options with them. You might have some small cap stocks that don't have options available currently, but most stocks will have options available. So step one is to select a put option below the current price. Now, if that makes no sense, we're going to go through that. But what I wanted to do is just show you a daily chart of Riot. So as you can imagine, Riot went up to highs of, I'm just moving its head out the way, Cam, went to highs of about 80, and that's when, Bitcoin was at its peak. And then, as we all know, throughout February, March, and April, crypto had a massive sell-off. And now you can see here that Riot is in what's called an ascending triangle, which is a bullish kind of pattern where price is making lower highs, and then we've got this resistance at around the $39 mark. So the best thing about options as step one is that we have to sell an option or select a strike price below the current price. So the market is currently closed, and it closed at $30.39. So Bitcoin has had a big drop over the last couple of days because El Salvador went live, were the first country to accept Bitcoin as actual tenure. They've had a bit of a snag with that, which has had a drop in Bitcoin. In my view, this is an overestimation or overreaction, and I think Bitcoin will recover. So now is a good time to look to start selling put options. And what I've drawn here, I've drawn a line at $27. And the reason why I've drawn the line at $27 is because we've got two areas here of support that Riot has found.
Hey, want to trade crypto and gold like the institutions? Well, you can, and it's free for 14 days with Sage Strategies, fully automated trading strategies. Check out their live track records for 25 unique strategies, plus they host everything for you, which is perfect for beginners to advanced traders or investors. Simply sign up for their 14-day free trial today to experience it for yourself.
The question I always ask myself when I sell a put option is, am I willing to own Riot stock at $27? And I'm 100% happy to own stock in Riot at $27. So once you establish your strike price, and if we go back to here, I will go through the definition of what selling a put option means. It means that I'm willing to buy 100 shares of the underlying stock, in this case Riot, at a strike price of my choosing. So we've decided to go, in this hypothetical situation, $27 by an expiration date. So in this case, we're going to do the end of next week, which is the 17th of September, in exchange for 58 cents, so $58 premium. So what does all of that mean? So when you sell options, you basically sell contracts, and contracts are blocks of 100 shares. So you can't sell options for 10 shares. You have to do a minimum of one contract, which is 100 shares. So I'm saying I'm willing to buy 100 shares of Riot at $27. Because again, if you look at the stock, if the stock again still needs to drop a little bit to get to that strike price by 17th of September. And if anyone takes this trade, I will receive 58 cents per share. And because it's 100 shares, that means I'll get $58 transferred into my brokerage account at the exact moment this order gets filled. So I've just made $58 straight away, not waiting a few days for checks to get cleared. I get instantly banked into my account, which I can withdraw and go do whatever I want with it. But, there is risk to this trade. So the risk is at the moment that Riot may drop to $26 by September the 17th. And what that means is I will then have to buy or forced to buy 100 shares at $27. So my brokerage account will lock away $2,700 for the duration of this trade, just in case Riot drops before $27. Now, what I just wanted to quickly show you was an example of an options chain. So this is where I got the premium figure for, and this is barchart.com. You can use Yahoo Finance or just Google Riot option chain, and you'll get lots of vendors that will show you the options chain. So we've got our strike price and then the current price. So if we go down to the $27 strike, so Riot has to drop a further 11% for me to be assigned those shares. That's crazy. 11% is a big swing, and this is the bid price of the option price. So that's where I got the $58 for, and that is a 2.2% return. So I just made 2.2% return on my money in a week and a half. Now that's insane. Tell me where you can make 2.2% guaranteed in like 5-6 days. And the worst case scenario is that I buy 100 shares of Riot at $27. Now that to me has been insane, and I've been wrapping my head around this concept now for ages, and I feel like I'm just printing money because I would love to own Riot stock at $27. Even if Riot dropped to $20, I've got no issue holding Riot at $27. And going back to step 0, only do this on stocks that you love and you're willing to hold in case Riot does drop to $15, for example. So that's step 1. And as I said, there are 2 outcomes by September the 17th. The first one is Riot stays above $27 by September the 17th. The option expires worthless, and you keep the $58. So if that happens, let's say Riot goes down from $30 to $29 by September the 19th. So the stock's gone down, and I still keep the $58 and the option expires worthless. If that happens, I just repeat the process. The week after, I'll do another Riot put, another Riot put, another Riot put, and I'll keep doing that until I eventually get assigned the shares. My aim is not to be assigned the shares, so I'm trying to use my technical analysis, use my fundamentals, my catalyst, looking at the news to try to stay away from it, but close enough to get higher premium. So if Riot does drop by September the 17th, I will be assigned 100 shares of Riot, costing me $2,700, but I keep the $58 premium. So whatever happens, that $58, no one can take that away from me. And if that happens, I move on to step 2. And step 2 is, so now I own 100 shares of Riot at $27. What I do now is, the terminology is sell a covered call option at your cost basis, aka your assigned price. So what that basically means is I'm willing to sell 100 shares of Riot at a strike of 27, so that's my cost basis, so that's my assigned price, by 0924, so that's 1 week after, and options, most weekly options expire on a Friday. And I've kind of worked out the premium. I don't know the premium because I don't know what Riot's going to close at, but based on the current price and everything, it's roughly about 90 cents per share, which works out to be $90 premium. So I'm holding a stock that is potentially below $27. So I'm holding a losing stock, but I'm still making income. And that's the point I want to get across is I'm holding stock that I'm waiting to go up, but I'm still banking weekly premium. So that income is still coming into my account every single week. And again, there's 2 outcomes here that can happen. Riot can stay below 27 before the expiration. The option expires worthless. I keep the $90 and I repeat it. I'll sell another covered call at $27. Now you can go above your cost basis to $28 so you can collect some appreciation when Riot gets to 28 or above. But if I like to just do it at my cost basis most of the time to get in and out of the stock, to free up my collateral, to keep doing this process. And then the last outcome is Riot could rise above $27. Therefore, I sell my 100 shares. I get $2,700 back into my account, and I get to keep the $90 premium. Absolutely insane. And if you just look at the ROI on this, so the ROI is your all your net credits you received. So I got $58 for selling the put, and I got $90 for selling the covered call, divided by the capital I put in. That's 5.4%. And I've been making 5 to 10 to 15% some trades, and quite comfortably I can make 1% a week easily by kind of doing this strategy. But I'm averaging around 10-20% a week, because what I'm doing is, because I've got a fairly large account, I'm not selling one option, or one contract, I'm selling like 10 contracts. So instead of 2,700 as my collateral, I'm doing 27,000, or sometimes 50k, and that's how I can get to making 3-4 grand a week by doing this strategy. And if you guys want to see me do this strategy live on my YouTube account, One Glance Trader, I've got an options playlist which we can link to below as well, that shows me placing these trades. I've got a dedicated wheel strategy video which goes into this in a lot more detail, as well as me placing trades on my live account. Like I made $868 in 5 minutes, and I'm currently doing a Riot. I'm actually doing the wheel strategy on Riot using one contract to show on my YouTube channel to educate people on the wheel strategy of those who are just starting out on smaller accounts as well. So, don't know if you got any questions, Cam, but yeah, that's pretty much the strategy.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description. Awesome. I mean, one question I did have was, like, is there sort of a tax benefit of taking the premium as your profit and leaving the stock in there?
So because I've been doing this less than a year currently at the moment, so I'm still having to have to go through that process at some point next year. But effectively, from a UK standpoint, it's classified as capital gains tax, so it's not income tax, which is good, because it's very beneficial from a tax rate purposes, especially from a UK perspective. So I'm sure my accountant will tell me some ways around some of this stuff. But yeah, the good thing is that you're taxed at capital gains for any option premiums that you get, as opposed to other forms of tax which are hit you at a higher rate.
So the other question I've got is, essentially what your return is as soon as you place the trade.
Yeah, exactly. So the piece that is what I love about this, you've got the control, right? You know how many shares you want to buy. You select the strike and you select the expiration, and you select the premium. Yes, the market will determine what that premium is, but if you want to wait and ask for $60 or $65, you can leave that limit order inside the market in the hope for it to get filled. So, and yeah, so you know exactly what you're doing. And one of the main questions I normally get is, we take this example, let's just say Riot drops to $15, right? So now I'm holding a losing stock that's 20-30% down, and I've got 100 shares. What can I do? So there are things you can do, like you can avoid assignment by rolling an option, which is effectively you can buy your option back and immediately open a new option at a longer expiration to avoid assignment. You can sell covered calls below your cost basis. So if Riot was at $17, I could sell covered calls at 20. There is a risk of that because Riot could spike above 20, and Riot's a very volatile stock. I wouldn't recommend it for beginners, but more advanced traders, and if you've got the technical analysis, if you don't think Riot's getting to $20 over the next couple of weeks or whatever it is, then you can do that to earn more premium while you're holding the stock and while you wait for it to recover. Or what you could do, which is what I like to do, is I like to have cash in reserve. So if Riot did go down to $15, I would then sell another put on Riot at $15, $14, and that will lower my cost basis. So it will bring my average down. So I'll own 200 shares instead of 27. I'll own 200 shares at 21 or something along those lines. So you keep buying more puts and you keep buying more shares at a lower price and your cost average down. Then as the share price has got less to recover to go make that, and you make more premium because now you own more shares. So if you own 200 shares in the $58 example, you'll make whatever that is, $118. All right, yeah, $118 premium as opposed to only earning $58 as part of that process.
Cool. And last question: Would you ever now consider buying a stock without taking this approach?
No, I've got a video coming out shortly. That's titled "Never Ever Buy a Stock Outright," which is basically, just go and buy a put option. And one of the hard things is about this particular strategy is that you do need a fairly sized account to do it. You can do it on margin. That's something I'm looking now to graduate to the next level in terms of kind of doubling my buying power to sell more options using margin and even more leverage, because options is quite a leveraged kind of strategy. But yeah, that's effectively what I've been doing now for the last 9 months or so, and
awesome.
long may it continue.
Well, look, Zoheb, can you tell the guys what's the best way for them to get a hold of you?
The best way is through my YouTube channel, One Glance Trader, or youtube.com/One Glance Trader. And like I said, my email is oneglancetrader@gmail.com. So feel free to reach out. I've got lots of options trading videos as well. I still dabble in Forex every now and again, so there's lots of stuff on there about when I was on the show last time. But yeah, it's the best way to get me.
Awesome. Well, look, that is fantastic. I've learned a ton. I did actually start off with options when I first looked at trading, so this has been a great refresher. Guys, do remember, hit subscribe, hit like, and click on that notifications bell, click all, and we'll see you in the next video.